Hello and welcome to this episode of Macro Sutra. I'm TCA Sharad Raghavan, Deputy Editor. And now we all know and we've been seeing in the news that the rupee exchange rate, it's been falling. It's currently at about 84.4. But why has it been falling? Is it that the dollar is strengthening or is it that the rupee has been falling? Is it both? Does this benefit India? Does it hurt us? To discuss all of this, we have with you Radhika Pandey, Associate Professor at NIPFP. Thank you so much, Radhika, for joining
Thank you,
us.
Sharad.
So now, Radhika, first, let's see how much has the rupee fallen in the recent past, and how does this compare to other comparable currencies?
Yeah, so depending upon what is the reference period that we take, for
Mhm.
example, if we take the period from November 1 to say November 26, that is yesterday, we see that it has fallen around 0.3 to 0.4%. So it's less than half a percent. In fact, if we take a bit previously, then the rupee had fallen by around 0.5%. So depending
Okay.
upon what is the reference period that we have taken, uh, in November, on most of the days the rupee has depreciated. But if we look at like the first 25 days of November, the rupee has depreciated by 0.3 to 0.4%.
Mhm.
And This pace of depreciation is much milder as if we compare it with some of the other emerging market economies, like if we look at say Brazil or Mexico or even the Thailand, the Baht. If we look at these currencies, their pace of depreciation has been much faster and steeper as compared to India, and there are various factors, both domestic factors as well as international factors, responsible for why those currencies might have depreciated more than India.
Right.
Uh, One factor is that the RBI has been managing the exchange rate, and we've heard this narrative playing around that since late 2022, the pace of intervention, at least in absolute level terms, it has increased. So
Right.
that is one reason that we have not seen very sharp swings in the rupee exchange rate,
Mhm.
even with so many external changes that have taken place, which have impacted some of the other countries. But if we look at, say, Brazilian real, that has depreciated much faster and much steeper. If we just take if we make a comparison of these currencies and take a reference period, say 1st of October of 2024, then we see that okay, rupee has depreciated, but it's much more stable as compared to the other currencies like Mexico. There's a different problem because yesterday Trump said that they are going to impose high tariffs on Mexico because
And
they
even
feel.
earlier, this was the expectation that he
Yes, so
would.
yes, so and now in order to curb immigration and in order to curb the rising incidence of drug trafficking, there'll be more tariffs on Mexico. Brazil is also facing high tariffs because of its exports of automobiles, steel to US. So those currencies are facing higher, fluctuation. Thailand, because of its connection with China's trade also, so there also the pace of depreciation is much higher. But overall, all EM currencies are subject to depreciation pressure of varying intensity.
Right. And okay, so let's start this off looking at the particular currencies. Let's start off with the main currency, which is the dollar.
Right.
What's been happening with that? The dollar's also been strengthening, right?
Yes. So, as you rightly pointed at the beginning of the episode, that is it dollar strengthening or rupee weakening? So, I think it's more to do first of all with dollar strengthening, and dollar is having a broad-based appreciation due
Hmm.
to multiple factors. One, of course, is the Trump's election victory that has accelerated the strength of the dollar.
Right.
Now, let us look at what are the policies that have given this strength to dollar. One is that Trump is saying that they're going to cut corporate taxes, which is
Right.
going to prop up demand at least in the short run, which is positive for the currency. So that is one. The other is that they're going to increase tariffs, which is again something that is going to strengthen the dollar
Hmm.
and also increase inflation. because the cost of imported products will rise. So
Right.
the inflation will rise, and when inflation rises, bond yields rise, because the investors, in order to hold bond, they will demand higher premium. So bond yields are rising, dollar is rising, and that is one reason that is resulting in relative terms, it's resulting in weakness of other currencies. So that is one reason, Trump's policies. The other also is that in the July-September quarter, the corporate results of the most of the S&P 500 companies were very robust.
Mhm.
So that has again imparted strength and improved the resilience, the outlook of the U.S. economy, and has bolstered the growth outlook and given an impetus to the dollar. So there are various factors that have given strength to the dollar, and that is one reason that on relative terms, whenever the bond yields rise, the differential between the Indian bond yield and the US bond yield that narrows, because Indian bond yields are relatively stable at around 6.8 to 6.9%, but the US bond yields have suddenly surged after Trump's election victory and after the corporate results were announced. So
Right.
that has narrowed the differential, and that has resulted in outflows of foreign portfolio investments from emerging market economies towards the US, because the US assets have become more attractive on
More
relative
attractive.
basis. So
Right.
that is one reason.
Right. And now this largely is also the opposite of what's been happening in India, right?
Right.
Where
Yes.
because the US has been seeing funds flowing in,
Right.
a lot of funds have been pulling out of India as well, and
Yes.
also our corporate results were pretty weak in
Correct.
Q2.
Yes. So one is the push factor, but the other, like domestically, we've discussed in earlier episodes that India's July to September quarter corporate results are
Mm.
not that great. In fact, for some of the sectors, particularly in the manufacturing sector, we've talked about say chemicals, metals. There, the profitability has been quite lower, and that is impacting the overall corporate sector performance. And that is one concern that has dented the sentiments of foreign portfolio investors. Again, we've talked about the fact that GDP growth for the July-September quarter may not be maybe weaker than the first quarter. The
Right.
forecasts are somewhere between 6.3 to 6.5%. So that is also resulting in FPI outflows. And the other important reason is the China factor,
Mm.
because recently China has introduced a slew of measures to stimulate the economy, to prop up the real estate sector, and in the short run this always leads to a reallocation of assets, and therefore we are seeing that there was for some time at least this narrative was going on, China buy, India sell. So
Right.
that also resulted in reallocation, and FPI is leaving India and moving towards China.
But
But
that
that
also seems to have reversed.
reverse now, yeah.
Yeah.
So there are these multiple factors that are playing around at different intensities, and in fact FPI outflows, if we now look at the data for the end of November, in fact now the pace of selling has come down, and in
Right.
fact FPIs have now turned buyers in some of the markets.
Especially after the state election results, especially what happened in
In
Maharashtra.
Maharashtra, yes,
Yeah.
and so we see, especially in IT sector, they have turned net buyers.
Mm.
So the in overall, when we look at November, they have actually turned net buyers. So a lot is changing in the this entire month. We see the picture. There was a time when FPIs were massive sellers, and over the last 2-3 days, they have turned buyers. So there are various factors that are playing around, and that is resulting in the volatility in the currency as well as volatility in the market. The VIX, which is one measure of volatility in the
Right.
market, has been showing fluctuations even towards the run up to the US elections.
Yeah, no, absolutely. And now we talk about volatility in the exchange rate and things like that. But if you look at the rupee, it's actually been pretty stable. And so
Right.
that implies the interventions of the RBI, which is what I wanted to ask you about next.
Yeah, so RBI has been intervening, and India is one of the countries that releases data on intervention, which is just purchase and sale of dollars to manage the exchange rate. But this intervention data comes with a lag of 2 months.
Right.
So as of now, we have data till September. So we don't exactly know how much intervention took place in the form of net buying and net selling of dollars. But one very crude proxy of intervention is the change in reserves.
Yeah.
Because if the RBI has been selling dollars to prevent the slide of the rupee, then we should see that in the form of reduction in foreign exchange reserves. So, sale of dollars should show up as a reduction in foreign exchange reserve, and one of the main component of foreign exchange reserve is the foreign currency assets,
Right.
which should see a decline, and that is what we have seen. By the end of September, forex reserves had risen to $700 billion, and since then. In each of the fortnight of October until 15th of November 2024, we have seen that foreign exchange reserves have been on a declining trajectory,
Right.
and the foreign currency assets also. Now, we need to be sure that the entire decline cannot be attributed to intervention,
Of course.
because there is one more factor that is playing, which is the revaluation changes that are happening in the foreign exchange reserve, and that is also there. Also, we are facing revaluation losses, because whenever US dollar rises and when the US bond rises, then our the assets what we are holding in terms of dollars, they face revaluation losses.
No, of course.
So
Yeah.
if currently if dollar and bond yield is falling, then we have revaluation gain. On the other hand, currently we are seeing that the dollar is rising, so revaluation losses as well as intervention in the form of sale of dollars, these are the two factors contributing to a decline in foreign exchange reserve. So certainly the RBI has been intervening, and in fact, in addition to intervening in the market, it is also actually using its other powers as banking regulator also to limit the slide of the rupee. There are reports that RBI is telling banks to cut their long positions in the dollar rupee pair, so that there is less demand for dollars, because banks undertake in dollar buying and selling for people who enter into arbitrage between offshore and onshore market. So the RBI has been discouraging banks from taking long positions in dollar, and also not increasing their positions further, not taking
Yeah.
positions further. Now this is debatable whether this is an appropriate way, because these are all regulations, and regulations should not interfere with the business of banks. So that's another thing. But RBI has been using a number of tools in its arsenal to manage the rupee, and that's why we are seeing that though while the rupee has depreciated, the pace of depreciation is milder as compared to its other peer economies.
And if you look at the curve, it's very smooth.
It's very smooth. It's flat when you. It's just okay. So from 84.1 to 84.5, that's the pace of
Right.
depreciation that has taken place. But when you look at the dollar index during the same period, it has increased from 101 to 107. So the dollar index appreciation is much larger, and rupee depreciation is much milder. So part of it can be attributed to RBI's intervention.
Right. Okay. And now the question that I wanted to ask you, in fact, I can weave it into one of our audience questions. So Vinayak asks, we always hear that the depreciation of the rupee helps exports. My question is, can depreciation of the rupee help in increasing our national GDP? And that's what I wanted to get at. How can the depreciation of the rupee help us and hurt us?
Yeah. So typically, depreciation makes our exports competitive, and through that process, in relative terms, if the currency has depreciated more in relative terms, we tend to gain in terms of increasing our exports.
Right.
Now, this is subject to a number of qualifications. One important qualification is that what is the import content of our exports, because in depreciation, what is happening is that our exports are becoming cheaper, but our imports are getting costlier.
More expensive, yeah.
So there is a threat of imported inflation because our currency has become weaker. So we'll have to shell out more rupees to get the same $1 and
Yes.
purchase imports. So if our exports are such where the content of import is lower, then we stand to gain from rupee depreciation.
Mhm.
In some cases, say in some labor intensive sectors, in areas like textile, we tend to gain when the rupee depreciates. So that is one factor, and that is the only channel through which the rupee depreciation can increase national GDP.
Yeah, correct.
So if rupee depreciation can improve the attractiveness of our exports, and if our exports increase, then, because on the expenditure side we have C plus, I plus, G plus, NX, it will lead to increase in GDP. But again, as I said, it depends on number of factors. Even if rupee has depreciated but there is no demand, then it won't increase. So there are a number of
Mm.
factors, but certainly import content of exports depends a lot. So this question or this impact varies from product to product.
Can we also say that this is just as an aside that the rupee depreciation, if it depreciates substantially, that it pushes back our $5 trillion dream further because
Right.
it'll take a lot more rupees to convert to $5 trillion, right?
Yes, that is true.
Hmm. And okay, so now Nime asks, and this I think you've answered, but Nime asks, is the RBI not regulating the rupee?
Yeah, RBI has been regulating the rupee, and in fact, if you there has been a lot of this commentary about RBI strongly keeping control over the rupee. And in fact, if you look at this month's RBI bulletin, RBI has come up with a clarification on this, that
Yes.
that there is commentary in the media about our intervention hurting exports, and that that doesn't happen because most of our exports are not so sensitive to exchange rate. We are moving towards value addition items, we are moving towards services. All that is true, but certainly if if rupee is artificially overvalued, it does hurt exports on a relative basis. If there are other
Of
currencies that
course.
are more competitive as compared to the Indian currency, they will tend to gain market share as compared to India. So that principle stays as it is. So, but yes, RBI has been intervening, and in fact, when we get the data for October, it will be very crucial to see because rupee started showing depreciation pressure from the month of October.
Right. And okay, and Rishu asks, is the initiative of de-dollarization feasible? And how does the appreciation or depreciation of the rupee impact our geo-economic environment?
Yeah, so de-dollarization is already happening in phases. So we had the recent BRICS summit in Russia,
Mm.
where a lot of initiatives have been taken to promote de-dollarization, and all these efforts towards promoting local currency trade or promoting payment development of payment infrastructure in local currencies. All of these are incremental steps towards de-dollarization. And also in the BRICS summit, a lot of initiatives were taken towards developing the BRICS bank, and also
Right.
developing cross border payment infrastructure and currency infrastructure. So once these initiatives that have been planned, they start taking shape, then we can say that there could be some movement along de-dollarization, though it's a long path ahead. And with
Mm.
Trump's coming back to power, and he's warned that any move towards
Yes.
de-dollarization would be subject to 100% tariffs. So there are these concerns, but yes, countries are moving towards de-dollarization by promoting local currency payments, and we are seeing that happening amongst countries on a bilateral basis and on a multilateral basis.
Right. So there you go. Basically, the rupee has been depreciating, not as much as several of its peers. And that's because there is evidence that the RBI has been intervening and kind of smoothening the depreciation. It's not allowing it to be a very sharp fall. It's regulating that part. The other side of it is that the dollar index has been strengthening for various reasons. One is the return of Donald Trump. He's promised corporate tax cuts once he becomes president. Corporate profits also in the latest quarter were strong. So money's been flowing back into the US, and that means it has to flow out of some places, right? And that includes India. So money has been flowing out of India and going there. And even our corporate results in Q2 were not that good. So for various factors, the dollar index has been strengthening, the rupee has been depreciating, the RBI has been stepping in. And now how this impacts our exporters is that in especially the sectors in which we don't import as much, our import dependence is not that much, then our exporters stand to benefit if the rupee depreciates. But for sectors where our import dependence is very high, then a rupee depreciation actually increases their costs because they have to pay a lot more for the same dollars worth of goods that they're importing. So it is kind of a complex subject, but on that note, that's all we have for you.